GETCRACK. Wake up, motherfucker.
About just how critical this Elon Musk-Trump relationship is to the future of Sam Altman and OpenAI.
Yeah, so, Elon Musk has turned out to be a close confidant and advisor to the incoming President Trump. And what we know is that Musk and Altman, who runs OpenAI, the maker of ChatGPT, their relationship has really collapsed over the last few years. Currently, they are embroiled in a legal controversy with Elon Musk having filed lawsuits against Sam Altman, against OpenAI, accusing them of deceit of Shakespearean proportions and calling Altman swindly Sam. So real relationship breakdown there, and there will be concern, and there has been concern expressed by those around OpenAI and other competitors to Musk's companies that they might get left behind or disadvantaged as Elon Musk advises the president on AI regulations going forward.
How critical is this time, this juncture right now for the AI story, the AI industry? Because it feels as though many of these mega cap technology and media companies are in essence in a race, or maybe even a land grab for supremacy or planting their flag in artificial intelligence. How much of a leg up does perhaps Elon Musk have with xAI versus OpenAI and Sam Altman, even though Sam Altman and OpenAI are arguably the first mover advantage type in this scenario?
Exactly. OpenAI has been the leader in this race over the last couple of years, particularly because of ChatGPT, which launched in 2022 and now has sort of more than 300 million users every week. So they're seen as leaders here. So it's a really key time for Google, xAI, even Amazon, Apple. Everybody's trying to catch up here and move forward. Now, Musk and those around him say that he's not going to use his political position and the fact that he has the incoming President Trump's ear to advantage himself. They say, he's going to play fair and be magnanimous. But our sources tell us, those around him who've come up against him in the past, that they don't believe that could be the case. So on one hand, you could have Musk sort of influencing regulations, advising the president to sort of help him catch up, since xAI is one of the newer, smaller AI companies in the space. And people are concerned about that. But equally, he's also competing in the market here. He's opened up a huge supercomputer, the Colossus supercomputer, with hundreds of thousands of NVIDIA GPUs. So he will compete, in the market, but also he can use his policy position to advantage himself and sort of get ahead of the other companies that are currently a lot more experienced and sophisticated in the software that they're putting out.
Number of CEOs visiting the president-elect continues to grow. Sarah is here with some news this morning on SoftBank. Morning, Sarah.
Good morning, guys. So yes, we've learned, according to sources familiar with the matter, that Masa's son, the CEO of SoftBank, is at Mar-a-Lago today, and he and the president-elect are going to be out with a huge announcement this morning that Masa will commit to investing $100 billion in the United States between now and 2029, the end of President Trump's term, and that he is also pledging to create jobs, 100,000 jobs with this announcement. This may sound a little familiar to you because back in 2016, Masa's son went to Trump Tower and he pledged half of that, $50 billion investment with 50,000 jobs to be created in the United States. That was at the time where he was raising money and had just created the Vision Fund. And so that money did get fulfilled in terms of investments in the United States in hundreds of company investments that the Vision Fund made, including, of course, WeWork. Didn't turn out so well. But ultimately, he can say promise fulfilled on that one. This one, much more ambitious. So I've learned that we can expect this announcement come later this morning. And it's obviously a big deal for President-elect Trump, who's trying to create investment and jobs.
Sarah, is he wants money coming in and jobs being created through, typically, I think in his mind, manufacturing. People making things in factories, or or maybe at companies. I just wonder, you referenced the $50 billion that was invested from the Vision Fund into many private companies 8, 9 years ago, or over that period of time. I don't know how many jobs that created.
It's hard to calculate how many jobs.
Is it going to be the same thing this time?
Not necessarily. So what I've learned is this one is going to be really focused on AI, because we know Masa has been very public lately about how bullish he is on AI. And from what I understand, it could also come in the form of capital investments around AI infrastructure. Think data centers, chips, energy production, what's needed around AI to build in this country. So that's more along the lines of what you said President-elect Trump probably would be interested in. But this president is a lot more focused, I would say, on technology and AI, certainly than he was last time around. He's got David Sachs as the czar on AI and crypto. He's now met or will meet with a lot of the big CEOs in technology. So I feel like this announcement actually around AI is very much on par with what the president-elect is thinking about and hearing about from supporters and advisors.
He's definitely been, do you see those comments from Mark Andreessen about the Biden administration and their approach to AI and how different it's going to be? He seemed very frustrated with that. Although I would point out, data centers do not employ many people. Building them, you get some people, but ultimately when they're up and running,
they're capital intensive, so a lot of investment.
Yes, a lot of investment, not a lot of jobs.
The most money in the world
this is 100,000 jobs, though, right?
100,000 jobs, along with $100 billion, which is a very large number.
The one area of the economy we do not need money for is AI. Everyone's throwing money at AI. They are. I mean, look, we need semi. If we want to, especially Intel needs money. They don't have the money to do what they're doing.
Now, well, that's part of it.
Yeah, and then that would be terrific. To fulfill that desire would be great. Rather have private than public money in that.
Yeah,
public money found its way into Intel.
It's true, and we know that they've committed, for instance, to investing in OpenAI. This could obviously be part of that investment. They have ARM, which there could be investments of obviously in the chip maker as well as part of that. But the reason I think it's politically so good and important, not just is it investment in the United States, which Trump himself has been soliciting and is a sign of faith and bullishness in that message, but also keeping AI in the leadership hands of the United States of America.
News, and I'm glad you had the story. I'm very glad you broke the story.
Although, don't you wonder whether they would have invested it anyway, and it's just a good opportunity?
We don't know what the prior benchmark was.
You know how this goes.
This is, he's got the Vision Fund. This is where you invest it, because frankly, there are a handful, but very few other places where you can invest in
But now you get in the good graces of the president.
Right. Don't forget the ARM Qualcomm lawsuit starts today.
Yes, that's actually a good point.
Qualcomm loses. Nice to meet you.
We just heard this hour from President-elect Trump announcing SoftBank's $100 billion investment in the U.S. over 4 years, though it sounds like it's going to be more than that. The president-elect calling CEO Masayoshi Son one of the most accomplished business leaders of our time. For today's Tech Check segment, our Deirdre Bosa is looking at what's changed since that $50 billion initial investment that was promised from Masa Son in 2016, Deirdre, which he did fulfill, but this time it looks a little different.
Yeah, Sarah, so what hasn't changed is Masa Son's nose for opportunity and his risk appetite. When he made that announcement at Trump Tower 8 years ago, he was already raising money for the Vision Fund, and he would have made those investments anyway. What will be different this time around is the amount, of course, maybe $200 billion, Masa Son's strategy, and Washington's own appetite for emerging technologies like AI. Now, the Vision Fund leaned on a spray and pray strategy. You essentially bet on every horse in the race, hoping that the winner makes up for all the losers. That, of course, didn't happen. WeWork dragged everything else down, ultimately hurting Masa's ability to raise more money for subsequent funds. In this new AI era, I'm told by a source familiar that Masayoshi Son will be more focused on a smaller universe of companies with a more explicit fit with ARM. That is now the crown jewel of the SoftBank universe. Now, that could mean that SoftBank moves into more of an operational role, more interested in AI-related infrastructure. There's hints that that is already underway. SoftBank was the first customer to receive NVIDIA's new Blackwell chips. Its telco ARM is planning to build Japan's largest supercomputer, and ARM could give Masa Son a license to move into producing his own AI chips. So how does that all translate to U.S. investment and jobs, as he promised the president-elect? Well, like last time, it could mean more investments into American AI darlings. He already holds stakes in OpenAI and Perplexity, but it is more likely to be on the infrastructure front. OpenAI has said that infrastructure is destiny necessary for the U.S. to be a global AI leader. And on the B2G, that's the Bill Gurley, Brad Gerstner podcast last week, Microsoft CEO Satya Nadella said he was power constrained, one of the key bottlenecks for AI. SoftBank is getting in position to help on both of those fronts. Now, the next administration itself looks more welcoming than ever to that strategy, with VC David Sachs as AI czar, Elon Musk in Trump's ear, Mark Andreessen involved behind the scenes. By the way, guys, a public declaration that Masayoshi-san has the incoming president's support that will certainly help him go out and raise the money to achieve some of those massive ambitions as WeWork gets further in the rearview mirror and he appears on stage with the president-elect. He might be able to go out again. Remember, 8 years ago, he was able to raise money from all sorts of different investors, including U.S. ones.
This is MicroStrategy co-founder and executive chairman Michael Saylor. Well, you're the guest of the moment. So is there a limit to how much Bitcoin you're going to acquire?
No, I've said we'll just keep buying the top forever. Every day is a good day to buy Bitcoin. We look at it as cyber Manhattan. I would have bought Manhattan 100 years ago, 200 years ago, every year for the past 300 years. You pay a little bit more than the person that bought Manhattan before you, but it's always a good investment to invest in the economic capital of the free world.
Do you think that Trump is serious about creating this Bitcoin reserve, and how would that work?
I think he is. And, you know, if you think about the Louisiana Purchase, California and Alaska, we paid $40 million to buy 75% of the United States. Nobody remembers the $40 million. But if you know where the money's going, you should buy the property, buy the future. And in this case, the Lummis plan calls for 1 million Bitcoin acquisition. That's worth $16 trillion to the country. RFK proposed 4 million Bitcoin that would be worth about $56 trillion. There's room for Trump to go beyond that, even $81 trillion in gains. And that's against $36 trillion in the U.S. national debt. So all the capital outside the U.S. and all of the antiquated 20th century capital is going to flow into digital assets. It's going to flow into the Bitcoin network. And the logical thing is for the U.S. to buy it now and own the future.
And just chase it up at any price?
I think just a progressive acquisition of it makes sense. Keep in mind, if you bought Manhattan from 1650 to 1700, a little bit every single year, it would have been a good acquisition. Right now, we can buy, the United States could literally buy 20, 25% of the Bitcoin network, either by trading out its existing gold stores or just by borrowing a small trace amount of money. And so the Bitcoin network could go up by a factor of 100. You might as well buy it before it 100x's.
Your Manhattan analog is really interesting, Michael, because the reason it would have made sense to buy Manhattan is because they agreed it's going to be on a grid going north. And I wonder if you see similar policy analogs right now in crypto. Are we that organized?
You know, the world wants a digital assets framework, and the United States has a great opportunity to define a digital assets framework. We need to define the definitions of a digital commodity, a currency, a security, a token, an NFT, and an asset-backed token. And we need the rights and responsibilities of issuers and the exchanges and the owners. But that takes consensus from the executive branch, the House, the Senate, and the industry. And we didn't have that for the past 4 years. The opportunity for the U.S., it's to issue $10 trillion of digital currency and back the dollar. It's to capture $50 trillion of capital gain on the digital capital network. And I do believe with the digital assets framework that this administration could put forward, there's no reason why we won't see $500 trillion of assets tokenized over the next 21 years and $280 trillion in capital flow into the digital capital network that is Bitcoin.
And where does that lead Bitcoin's eventual price?
My 21-year forecast is for Bitcoin to appreciate about 29% a year, ARR, to $13 million a coin by the year 2045.
Yo, what's up? It is December 16, 2024. I hope you enjoyed that Bitcoin rally. That was it. That was what I was waiting for. So, we got FOMC on Wednesday. Remember that? I think watch the small caps. if you're in sound was up 16%, so that's like 200% up on that. I probably would sell aggressively at this point, even though, like, yeah, you want to be bullish. But here, let me put the chart up. Yeah, I don't know if you want to hold that damn thing, but yeah, this was a pretty damn good play. Like, one of the best plays of the year, I guess. So yeah, if you bought around here, $4, $5, it's like 20. It's almost at 20 now. Pretty impressive, I think. Yeah, I mean, CKJ3 was on here like at one point. I think he confirmed my thoughts about it. It's probably like 18 is probably where you was the limit. Now that it's like above it, yeah. I mean, you could try to hold it through, just because, like, as I said, I told you guys, look at the IWM, look at the small caps, look at what it's doing here. Now I'm gonna play a video at the end, talk about small caps. So then we're gonna get that, and the XBI, yep, very important, because XBI was very weak, very weak. I don't like this. I don't like this at all. It has to keep fighting this purple box I put here, purple line box here, and it's not doing that. I mean, IWM just looks better just because it has a lot of banks in it. So a lot of those regional banks will keep that afloat. So that's why it's going to look better. But the growth side of things, if you look at that one, yeah, which is the most aggressive, the biotech sector is the most aggressive growth area. Not good. But hey, NASDAQ is up again, and very good. Like, this is what I thought would happen. So if you're in SOXL is a 3x leverage of biotech. If you're just grabbing them around here, 25, 27, now this trying to push past 30 finally, after this move up here, move back down. Now it's trying more, and now we're getting the moving averages to move up. I would say, like, yeah, I mean, I wouldn't be that optimistic it can get to 40 and above again, but at least like 35, 38. And, if you need to sell it by January, that's fine. I think, yeah, I can hold up, because today was Avago's day. Avago, very good. So since earnings, this is what I thought would happen. Avago is probably one of the best longs you could possibly own in your portfolio. Like, I wouldn't buy it now, but yeah, I thought like this thing would start taking over from Nvidia. So it's the whole semiconductor space. Yeah, you got Intel being weak as crap. You have ARM. You saw ARM. They were talking about ARM. Marvell taking over too. You see Marvell up 3% today. Yeah, so Marvell and Avago, Broadcom. It's Broadcom. Broadcom bought out Avago, but kept the ticker AVGO. Marvell is MRVL. I'm not talking about like comic books, okay? Marvell. So these two will take over for the AI hype phase part 2 into next year. I don't know how long that will last though, but it just needs to hold up the semiconductors for maybe at least a quarter. 1 quarter. If you're lucky, you get a quarter out of this, and then everything else will just move to software crap like sound. Sound is the most aggressive, speculative type of things. But if you don't like that, you can do Asan. We talked about Asan, ASAN. We were talking about that, up 13, 14%. So we were talking about that last week. That's what I was waiting for. This earnings last week is breaking out here. This is perfect. This is what you want to see. This is what you want to see. Something like here, right? I'll draw 2 lines up here. So between 28, 32, all right? If it gets through here into next year, this is probably going to be the new hot stock for a while. And then we have Twilio. I don't know how much AI they did. I did Twilio back in the 2018, 2019 days. This was nice. Now it's been rising ever since, again, trying to perk up. Yeah, so I would be looking for software companies like this, and we'll see. Yeah, we'll see. Okay, let's look at Upstart, UPST. Like here, we got here. Now it was fighting a bit in this resistance area between 76, 70, and 76. And now we're breaking out again. Yeah, this could be another good one. So this is the AI loans. Okay, so software determining who gets a loan and whatever. This is the thing that's happening. So this is the fintech sector. I was talking about that. ARKF, ARKF. You see that? All that Kathy Wood garbage. Now it's popping. That's exactly what you want to see. So we'll see what happens in Powell. That's the most important thing into the New Year's, and then we can get like big movers. Okay, very big movers. So it's easy, just shooting the fish in that barrel. Now, let's see what else we got. Oh man, I love this garbage stock. Perfect. You see this? I was waiting for this. Trash. And now we get a pop on. It has customers. It has 10 million customers. So we have Ahar. I don't even know how to pronounce this dang company. I just pronounce it different ways each time I say it. Air. I'll just say Air. All right. Test Systems secures initial 10 million in orders for production wafer level burn-in of advanced AI processors. So this company was very dependent on the EV sector. Like a lot of electric vehicles need to test specialized semiconductors that use the gallium nitride, something like that. I keep forgetting what it is, but this is one of the few companies that can test it. So this thing just does test systems. So you have to do a lot of chips. You have to test if they're like a good batch or not, and then you throw out the chips. So very meat and potatoes type of company. So not like something where you go like you would think, oh, it's gonna have a lot of growth. Well, it's small, one thing. So, and the stock is very new in relative terms. So it's very easy to push up and down. So yeah, you can trade this thing. This thing went from like the COVID days at the $1, you see. So it was already out like probably way before that, but it never really went anywhere, okay, above like 7 and 8 in this area here in the 2007s before the great financial crisis. And then COVID, you see what happens, right? You inject liquidity into the system. You got QE, pump. Very easy to pump a stock like this. And now it returns back, hasn't been doing anything from the 2023 days, went back down to 2024 because this was during the time when Elon Musk was like, we don't need to have to use this gallium nitride or whatever the heck it is. So this thing got bad news and it went back down. So now that it's done this, AEHR, okay, guys, I'm watching this thing now. So I'm going to add this to the NVTS that I'm already trying to do here. See, I'm waiting for this to pull back some more, buy some more, and then move back up. So let's see if this thing goes and hangs around 3 and then into Powell, pop. So NVTS, AEHR, same thing. So they're both semiconductors. They're more risky, but yeah, watch them. They can move really quickly for you. So that's a good trade. As an investment, I can't tell you because I think these are way early days for those type of companies right now. And I think it's better off. You're better off buying those things after the next recession, okay, which is probably within a year or two. Okay, 2 years, I would expect. So another thing, Tesla, man, beautiful. So Garion asked me like, okay, how did I do my point and figure targets and all this stuff? Man, beautiful. After it finally broke out here in November, and then it just kind of slightly went up a little bit, but then went aggressive this month. So for the past 2 weeks, this thing has been a real good leader for the Mag 7. Now let's see what's up. So I'm going to share this thing. Let me share this thing. Let me find the picture. And then let me try to explain it again for you guys. So this uses the point and figure method to determine the targets, okay? Determine the targets. So this was what I was saying. So once you get that, okay, I think you gotta freaking zoom in for you guys. This stock is so logarithmic. This is parabolic. Yeah, okay. So I use point figure. and I use reversal 3, box size 8%. Okay, Gary, this is what I did. Okay, so you count the columns, all right? So you count the columns. So this whole range here, this box here I drew, like this red, pink, whatever, is where I do my accumulation count, all right? So, and I'll give the video again because in the October streams, I kind of gave some links, and then I'll give another link again now after I'm done with this explanation. So you count here, 1, 2, 3, 4, 5, 6, 7. 7 columns, okay, of these X tic-tac-toe. These are just the tic-tac-toes, all right? This is what I call these charts, the tic-tac-toe charts. And you can go to stockcharts.com and you can just make your own like this. But here, that's my settings. I do reversal 3, box size 8.0%. And you take the 7 columns and a 3 box reversal. So 3 right here, 3 box. So 7 times 3 is 21. 8% is 1.08 to the power of 21. Okay, because we're doing percentage. This is logarithmic. Okay, so there's a power. Now we get about 5, right? So what I do with that number, I take 5, I multiply to the bottom of this thing, 139.49. 5 times that is around 702. The top of this box right here, I put 278.84, multiply that 5, I get 1,404. I don't know if it's going to get to 1,400, but, you know, at least let's see if it gets to 700. If it gets up to there, if Tesla gets up to there, good going, guys. Good going, guys. So, yeah, because we've been in this range since how long? Let's see, 2023. Okay, and then if we count this whole thing back up here all the way back, then you could be longer, right? We could have a lot more, but yeah, it's around 2023 when this whole crash happened here, like, and then it bottomed out. So this whole range will count from around like July. So that's what the 7 means. That means from around July 2023 up till now. You take the counts. And that huge range. That's why I say the bigger the base, the higher the space. Bigger the base, the higher the space. All right. That's real nice. Real nice. Okay. So let's go back. So that's the old that's the old saying I keep saying. And then let's go the higher the base, the bigger the space. Okay. So you see that? This whole thing dropped in 2022 towards the end of that, and then we bounce. So you take this whole area. You take this whole area as a Wyckoff structure, and then now we're breaking out of it right here, right? We're broken out since probably Halloween into elections, right? It was about to break out. You see the way it was moving. So perfect. Now you're broken out. Now, I don't know if you want to count this whole thing as like a big structure. We could later, but for now, that's already too much, right? You already see it's like 700 to 1,400. Like, come on. Yeah, I mean, maybe in a year or two, but that could be the time when it's over, right? That could be the time when the market is done moving up. This could be the leader right here if they keep doing the AI crap more than the EV stuff. But let me just show you the Chinese one. Man, what was the Chinese one? BYD. Okay. Yeah, that's just the one I was talking about. Yeah, you see this? So this is BYD. This is the largest Chinese EV maker. So look at how long this range is, and it kind of lines up with Tesla, right? So if Tesla needs to grow, what it would have to do is that it has to sell more cars in China. That's what you would have to do if your company is really reliant on EV expansion, because people in Europe and the US, they're pretty much tapped out on EVs right now. You're not going to get much growth anymore. So where's the bigger player to be? India, China. And that's why these charts move very similarly, because everyone You know, when you look at it, you're like, yeah, well, you're not going to grow anymore, so why would I buy your stock? But now we're breaking out, right? We got Elon's in Trump's ear. You heard that, right? And then he's going to do the AI stuff, see? And then you got Masayoshi-san coming in with his $100 billion in AI. So a lot of these people are coming into Trump's ear right now, and they're going to try to pump all their investments up. So this is where you got to be. This is where you got to be. All right. Now let's go back. Let me try to get the links for the. Let's see, stock charts. Get the links. So you go to Stock Charts TV. You can find all the old videos on how to do your own point and figure stuff. Okay, Garian? Yeah. Let me see. Okay. And you look for Bruce Fraser. And if you go through it, you can probably find all the point and figure, all the Wyckoff stuff that he does. And yeah, they're very useful. So you can go looking at it. Okay. So Bruce Fraser, look at that. All right, Garian. Go to Stock Charts TV. All right. That's it. That's all you got to do. Okay, we're done with that. Let me see what other stocks I got to look at. ARK. Yeah, I mean, I know ARK. Oh, Mobile Eye. Yeah. That one's good. That one's good right now. So the one that Tropes was mentioning, yeah. I've been eyeing that one too. Mobile Eye, MBLY. Oh yeah, perfect looking thing right here. What it's doing right now. Oh yeah. This bad boy going from 18 to 30, 37, no problem. Yeah, no problem. So next, this will be probably another winner for next year. So I'm always going to be looking for the losers, looking for the stocks that are losers. Another one is this vertical takeoff, electric vertical takeoff. So yeah, my cousin was in this, so I told her to buy, and she was in 6, and then when it went down, back down to 6, she was like, "Oh shit, should I sell it?" No, now it's back up to 9. Okay, this is probably the best of the electric vertical takeoff and landing stocks. So this is like a big size drone. All right, you talk about that car size drones that's flying around New Jersey. This is the shit. This is what you got to get, because they're making them for you to do taxis. Okay, so you get in just like the automated taxis we have. You know, these tech people, they just love making all these stuff up. So it got a lot of investment from Intel, actually. Some of these guys, like I think Intel invested in Joby, Joby. But yeah, my favorite is ACHR, Archer Aviation. So I'm not saying this will be actually a company that will do anything, because right now we're back at that SPAC level. So this was a SPAC, and it dropped and went this way, sideways. And it's just like, all right. So if you got it from $2, $3, $4, $5, $6, and now it's broken out, let's see. Okay, let's see where it goes. Maybe this will be one of those really hot stocks for next year, because as I said, we got to look at the small caps, because when the small caps run, everything runs. Doesn't matter if it's a good company, bad company, I don't care. Because what happens is it's a tide rises, and these small boats, they rise really fast. So they're great for trading. Really great. And then you can look at RX. Yeah. Right? Jumped up to 9 yesterday, right? I mean, last week. And now it's fighting again. It's trying to fight. It's trying to hold. So RX, AI pharmaceutical stock invested by Intel. Another one is AI. It's just ticker symbol AI. Very easy to remember. And now we're fighting in this 39 area. Man, and once it gets to 50, okay, get ready for next year. That's it. So it depends on how long this small cap stuff will last, okay? Small caps, when they run so fast, and then you just got to book your profits, okay? You just go boom. And we got to talk about this one right here today. So you remember I was playing that video of Shkreli like dogging on quantum computing stocks? Who gives a crap about fundamentals? This thing is up 65% today. Who gives a crap about fundamentals? You have liquidity. You have people buying on greed. It's all about emotions and behaviors. You see this box? This was a range that was set up since probably around Thanksgiving week. So it's bouncing up and down, and now it broke out. So whatever it was doing before, man. So this is QUBT. I don't know what it does really. I don't care. I think all of this stuff is yeah, Scully could be right. It's vaporware, right? I don't care. I just trade. And these things are great for trading. So, I mean, personally, what I told people was like, you know, it's better off you just day trade it. If so, for all you guys that love day trading, yeah, fine. These are the stocks to be doing it with. For people that swing trade, very risky. I wouldn't recommend it. I personally wouldn't do it. But since you guys, some of you guys are very aggressive, and you needed some stocks that jump up and down like mad, like an options, then yeah, this is the place to be since September actually, because IONQ started it off. So way before Trump started making things go crazy, it was this thing. So they had news that they had a government contract, and then this thing popped off. Then the rest of them popped off. And I think Tropes was the one that mentioned RGTI. I didn't even know this one, but here, I'll add it to the list too. So all these stocks are just following this trend. It's just a bunch of idiots buying this thing, really. I personally, that's what I believe. But as long as there's enough idiots and there's enough liquidity, this thing can go higher and higher. So Martin Shkreli can short this thing however he wants. But if you can't time the top, don't bother, because once the small caps go up, oh boy, this thing could go up another 1,000% easy, because it's just too convenient. You know, you got small caps, micro caps. These things didn't even have very good volume before, right? And then all of a sudden they just pump up, and it's increasing volume. They have a very low float. The only way this thing would just like crap out really quick is if they issue more shares. That's the danger. When you're dealing with stocks like this, with companies that are very tiny, they love issuing more stock. So if they announce like, I'm issuing more stock, oh crap, over, game over. Like it'll slow you down. Momentum gets killed. That's the danger about playing it. So that's why I said, like, I think day trading is okay. Swing trading is probably a lot more risky, because you got to hold it overnight and stuff. And they could do an announcement after the close saying like, oh, we're issuing more stock. And it's like, shit, you're trapped, right? So that's what I would say about these things. So buyer beware. But yes, they're very good for day trading. Definitely. It's like you see the way it moves and you just read the chart. You're just like, yeah, easy. Yeah, you could just like get 20, 30, 40% every time it does a big move like this. And we'll have to see. I think QUBT broke out. IONQ wants to break out, I think. Yeah. So this thing is going to break out, but I think you got to be more cautious with this one. This one is actually more legitimate than the other ones, IONQ. So this company is probably more the legitimate quantum computing stocks, but even then, I wouldn't try to be doing it. And the other ones are like the space stocks. They're all kind of goofing off right now. Rocket Labs, Lunar, so LUNR, RKLB, ASTS, PL. They've been doing this range, see? They've been hanging around these ranges. They're trying to build. So watch for Powell. These things might just jump up another 100% into next year too. So there's a lot of opportunity for swinging if you want to. I'm just chilling out. I'm not going to be very aggressive because I don't think I need to be, because I already made enough money last month into like the first week of December. I don't really care. So, but I'm just telling you, like MSTR, I told you last week, it was like, oh, look at this. It made this bottom here at the 357. So MSTR. So we had MicroStrategy, you had Sailor talking, and then it's fighting back. So if you remember back in like the first week of December, Yeah, HB was trading this with me too. I was just like buying it here, and then it pumped on that first initial Bitcoin getting to over 100K sell right away. And then it just dropped. Man, I should have shorted it right there, but I was just like lazy. I just went back to sleep. I just like left that. It opened at here. I was like, okay, good. Bye. I'm going back to sleep. And then it just faded, right? It just faded that whole day. It's struggling to get back above this rectangle. So this red rectangle that I drew, right, back when I was shorting MSTR here, so MicroStrategies, it's like so important, this area, because it's just like, okay, if you look at stocks, I drew the same thing, right? You draw these rectangles. Like when I draw a rectangle, it basically means this is a congestion area. It's like it's easy to go through from the top. Like when it crashes, it's like it slices like butter. But when you go from the bottom back up, you're just fighting all the time, like escape velocity or something. Like every time there's sellers coming in, they don't want to hold there's no new buyers, because you had all these idiots here buying, and they're just like, once you went through this area, it's like, oh no, everyone's scared. Like the only people left are trading. Like they're just trade. So the real investors only got in probably in semiconductors down here in August. They'll hold for the next year, but there's not enough new buyers to push this thing back up. So the only way you get out of this like congestion area is like when you get the retail to come in. So now you got that, like, oh, Broadcom had a good earnings. Marvell had good earnings. So this one was when Marvell got it, and then Broadcom. So now you got two semiconductor stocks that can take over for the weakness in NVIDIA and Intel and ARM and AMD. Because AMD, ARM, Intel, NVIDIA, they're all crap right now. And you need new leaders. So the only way this sector is going to move up is, okay, I got Broadcom. I got Marvell. Now those are my new leaders. So now this thing can struggle its way back up. I'm not saying that it can break out. I'm just saying that it can get back into this zone, try to get back up to like 238 on the SOXX, the Philadelphia Semiconductor Index ETF here. And from there, we'll see how it does in January. I don't know. Maybe people are very optimistic that the other ones will catch up and push this forward, but that will require Intel, AMD, ARM, NVIDIA to like go back up. Are they? I don't know, but that's what I said. So you just look at the chart, you see right away what it's doing. Because if you look at the software, IGV is the ETF for software. This has been picking up a lot of the slack this quarter. If it wasn't for this, the NASDAQ would just be going sideways or down. But because, you see, this is like a piston, right? So let's say you got a pistons. You got a four, like how many cylinders you got on your damn engine, right? As long as one sector is picking up the slack that another sector is going down, you can keep it at least treading water. But here you see now we got one thing going up and down and then going up. That's why it's so hard to short the index, of S&P 500. They construct it in a way that makes sure that one side of the ship, takes over for the other side. If you got people that are slacking, you have others that'll take over. So that's why it's so hard, because they design it so perfectly that they make sure the stock market will go up, because you need that 401k to go up. You got the pensions to go up. You got to get people to be trusting the U.S. And foreigners love putting money into the U.S. stock market. And that's why it's so hard to kill it. What could kill it? Watch for the yen. Okay? So this week you got Powell talking, and then right after you had the Bank of Japan talking. So if the yen starts doing funky stuff, we might have another repeat of the summer. That's why the summer happened, right? People were like, that's why I was talking on John Gall's channel about like the yen, and people were like, what the fuck do I care about the yen? Dude, the yen carry trade pretty much is a liquidity multiplier. people just go to Japan, they convert their currency from whatever they have into yen, get the dang like bonds there, and then they convert it right back and it's just like, oh man, it's an easy 3-4%, I think, is a carry trade right there. And then you have Mexico. Mexico is another alternative too. So let me talk about Mexico right now. So Mexican stocks right now are fighting in this range, 51 to 53 on the EWW Mexico ETF. So I bought for my parents a bunch of this right here when it was dropping double bottom. Now, I'm pretty bullish. I'm pretty bullish on Mexico at this point because it's already got beaten up a lot. This is what I was waiting for. Once they got that like new president, you got Trump, you just create so much bad news. You just like slice this thing down here. Now here, okay. Now let me see after Powell talks, does this thing get back up to 53, 54? Then I'll be like, oh, I might add to it. I might add to my position. So you can use MEXX, 3x leverage of EWW. So MEXX. So that's on the list. That's on the banner. You can look it up. So that's probably what I would use. So if you're going to be bullish on Mexico, yep. I mean, the other thing too is to be bullish on India, but India, yeah, well, I don't know. That's a tough one because I think a lot of people agree that Indian stocks are kind of overvalued, but hey, you know what? You got to do what you got to do. Okay, China's right back down here. See, so it had a temporary bump up on the stimulus news, but we've been here before. You see this? Bump, go back down. Bump, go back down. Bump, go back down. So just pay attention, though. And the stocks I told you to pay attention, I told you like several streams ago. But the one that I am eyeing right now is TIGR. This chart is doing a lot better. And this is like one of the Robin Hoods of China. Okay. And China is going to try to get all their citizens to start buying stocks and get into 401k type situations. So this bubble might be the bubble to get into. So I'm watching this. TIGR, up fintech. Okay. And the other one, like, this one, I mentioned this so many times, KC, because this is AI data center. And for a Chinese stock, it just ignores what China does most of the time, which is quite interesting. So sometimes it follows with China and sometimes it doesn't. And now we are in this area here where we're about to break out. So KC is something I will watch it the next year to see if I will add to it. It's very risky. I don't really trust it, but hey, I can't argue with like $3 to $9, but I'm not gonna put a lot of money into it. I would say like, yeah, don't go all in on stuff like this, even though it looks really nice. This chart is a beautiful chart. Don't get me wrong, but if you're holding it, one of these days you might get burnt, right? So I mean, stuff like this is like beautiful when you're just like, oh, you just get in at the right times and you're just like, oh yeah, like sound, right? This thing. But if this thing just turns around, you just get burnt. Like, let's look at SMCI, right? I told you last week, I was saying like, okay, I see Friday after hours, it's up. I see pre-market Monday, it's up. But I'm like, if during the day this thing doesn't really do anything, I'm out. So yeah, I got most of my things out. I have a few things left. And if you want to do leverage, you use SMCX, okay, 2x leverage. All right. So that's the 2x leverage. So I like what I see today, but it's not that convincing yet. So we had this like capitulation candle. Basically, all the idiots that bought last week at the highs probably were like, get me out. And then you have this green candle as a reaction. After that, it's just fading the rest of the day. But at least it didn't cut through halfway of this body of this candle. So if you look at this candle, you got to hold it. You got to hold it. So we touched we tapped that resistance. So we opened below that resistance around 35. We get below it, we drop. Now you want to watch this thing this week, and you got to consider like, hey, is it building a new sideways pattern? Because here it tried to do it like last week on Wednesday, and then when it touched here on Thursday, you see it tapped that 39.50 area and then completely collapsed and went back down. And after that, it's over, right? Because you don't show me any strength during the day. So a lot of times you want to look at a chart intraday, and then you look how it behaves. You see, the first time you do it on Monday last week, you open and then you go red candle. And then when you try to recover, you don't even get above halfway this red candle. So now this green candle is the opposite. Now you want to stay above halfway this green candle. If you keep seeing this, if the next few days you keep seeing like it's trying to hold, it fights, then you're like, okay, maybe it's ready to turn around. And then I would swing it back up to 50. And maybe this time it'll go up to 60. You know, especially with the semiconductors are doing really well, right? So that's why I'm saying you just look at the charts, you can see the behavior right away. You just look at how it does it. Like if you look at this one right here, December 3rd, it popped up, gapped up, it went down, but then it tried to hold the previous day's holdings. That's why I just held it, and I just said I just bought some more down here at the resistance, and then once it went back up and it did this though, it was just like, oh man, at the end of the day, it was just closing like this, where it just gave up everything. I'm like, nah, this is over. You can't do nothing. So for you guys that look at candles, it's really important to look at how it behaves during the day. Like if I switch this over to a daily chart, like you lose that information, right? So go down to an hourly chart. I use 65 minutes, and then look at how it behaves at the open and then the close. Okay, the open and the close. That's it. Look at how it behaves. So this whole thing got negated. So this is how it closed. It closed right here, canceling out that whole move in the morning. That's not a good sign. And then once the next day you do this, yeah, you confirmed it. And then you see how it does the next day, right? SMCI, like it does another red candle, and then it can't even get to the halfway point of this red bar, and then it can't even get into the resistance. So once you see those things, you're like, no, I'm done. Like I probably would go short. If I'm aggressive, I probably would short this damn thing, right? Because that's so easy to see. There's no trend going back up. So, but now today we might see a change. This is a change of behavior right here. This is a change of behavior. Once you see that behavior change, you're like, okay, there's somebody down here below 32 willing to keep it up, prop it up. Now, let's see if the new buyers come in and try to push it back up above 35, and then we can see something change here. But you know what? Let's wait and see. Okay, wait and see. So you guys that missed out on SMCI down here at 18, this might be your chance. Watch it. Keep fighting 35. If it can fight it, go for it. Yeah, because this will be a great swing. And the only reason I mention it is because, like, oh, I see the semiconductors moving up. Once you see those semiconductors move up, like, let me show you this, right? Oh man, this is so messy. This is such a messy chart right now. Oh my god. Okay. Let me see. Yeah, this is a messy chart. No, I drew so many dang lines here. Okay. Like you see this whole area here, right? This channel that's moving up. You see this? We've been fighting at the bottom of it. We've been fighting to get back into it. Now, with the MACD here, this is the MACD. You see this? It goes to the zero line. So this is a weekly chart. If after Powell, this thing turns up above zero and this thing starts pushing back up, okay, you know what? that's when you go aggressive on SMCI. SMCI being the semiconductor stock, and it's already had all the bad news come out already. It's kicked off the Nasdaq 100. It's being replaced by MSTR, MicroStrategies, and that's one of the things you got to look at. It's because MicroStrategies is replacing these things in the Nasdaq 100. So people that just buy the QQQ ETF or they just buy index options and all this stuff, they're helping Michael Saylor just pump everything, because once this gets included next week on Monday, the 23rd, that means not only you have ETFs that are in Bitcoin, but you have people buying Nasdaq 100 ETF also will help MSTR, which will also help Bitcoin to stay afloat. So that's why I say now things have changed. Things have changed. What I expect is that we will have a minor top at maybe at least 112. So 110 to 112. You get there, right? That was my target. Once you get there, then wait and see. Okay? Wait and see if it pumps to 130 first. Once you get over to the New Year's, that's when you jump out. And then you get back in around May. Okay? Sometime, maybe around tax day. So around tax day, April 15th, around there, and then into May. And then you'll pump up again one last time for Bitcoin. And then you'll get a big crash after that. Probably end of summer. Okay? So that's what you want to see. That's when. So if you're ready to get going, you got to get going. That's how I picture the chart flowing into there with the cycles I see. Okay, so that's just what I'm thinking right now. But we're thinking like 2, 3, 4, 5 steps ahead. So just focus on this, because we just need to get to 112K on the Bitcoin, and that's about it. Because it's almost there. Yeah, perfect hit. And then you get this. Yeah, perfect. All on this upper channel right here. You just tap this and then you pull back down. That's the first tap. And then the next tap would be like it breaks out of this channel completely. Like once it gets out of this channel, it's just going to go crazy up. And then that's when you go crazy back down. And then from there on, it's just altcoin season. You just got to do Litecoin, Ethereum, all the other garbage, because that'll be the second stage of the altcoin season. Right now, we're not there yet, okay? Because if you look at HBAR, which is probably the best performing altcoins, you see, it hasn't been doing anything. It's just warming up. It's just trying to see if Bitcoin's really going to do what it's going to do. So again, wait for Powell, wait for the Bank of Japan after Powell, and then we'll see on Friday. After that, once you get to Friday, you get past the triple witching, so you get past the whole options expiration, then we can move into New Year's. Okay, so that's what we're waiting for. That's what we're waiting for. All right. So I think I covered all that I need to cover. XBI, okay, I don't know. Maybe I'll cover that. XBI. Yeah, so I covered that a little bit, but let me look at ARK. So ARKK, yeah. So this one, Kathy Wood's little baby. Yeah, you can use the leverage TARK. And if you do small caps, you can use TNA. TNA is triple leverage of that. And TARK is double leverage of the ARK fund. Okay. Yeah. And let me see what else. Oh yeah, my favorite stock so far right now is BitDeer. So BTDR has been fighting ever since. It was up about 20% intraday. Man, so if Bitcoin really breaks out, this thing is just going to go shooting up. So these are the top ones, like Wolf, like Gwyneth Paltrow's little Bitcoin miner, WULF, HUT, and BitDeer, BTDR. So these are my favorites. And then outside of that, like, yeah, MSTR, Mara, CLSK, but these are old dogs, right? These are old dogs. They're going to take a lot more moves just to break out of this range. Like if you look at Mara, it's been in this range for a while, man. So I played this right here. I mean, I played it multiple times, but the last time I really was aggressive on this one was in October, November last year, from 7 to 8 to 9, and then up to 30. This was a beautiful run. And the reason why was that the NASDAQ cycle coincided with the Bitcoin cycle. Right now, the problem is I feel like the NASDAQ is about to end. Okay. So the NASDAQ 100 is about to end by New Year's. It's not going to have this huge push up. And so right now, this thing would only be dependent on like how well the small cap growth stocks will do. So it's XBI, the biotechs better be doing good, because if this is not doing good, then I don't expect Mara to be doing that good, even if Bitcoin gets up to 130. You know, I don't think you'll get this huge move here. This is like from $7, $9 to like 30. That's a triple. That's a triple, right? Do I think this is going to be a triple up again? No, I don't think so. I think this was only a 2023 phenomenon, and you know, it did a lot better back in the the COVID days. Come on, this is like 50 cents up to like 44. This was beautiful, but yeah, you're not going to get that again. The COVID was such a unique time, so that's why I warn you: don't be too greedy. Like, don't expect things to be like it was in 2020 and 2023, all that stuff. No, we're at the end of it. We're at the end of it. So, pace yourself, okay? Take your time. Get the good trades. Get your money. Get your profit. Get out. Don't be greedy. This is not the time to be greedy. If we want to be greedy, get into gold and silver when the time is right. Get into oil, natural gas when the time is right. These are where you want to be. This stuff, we're at the end. So get what you can get and then get out. Okay, we're at the final move here. So yeah, that's all I got to say about that. So don't expect the same things to repeat again, because yeah, I'm looking at gasolina. It went back down here. So UNG ETF for gasoline is about 13.8. Yeah, okay, maybe. And then natural gas down 1%. I don't know. Maybe this is gonna go fall back into here, but I'm looking to short natural gas temporarily from here into New Year's, and I'm gonna go long gasolina into New Year's. But yeah, we'll see if I want to play that. Like I said, I'm not gonna be very aggressive. I already made a lot of money in November into December, so I mean, it's up to you guys. Everything is going to be dependent, and I'm going to play the video with the small cap, so maybe this dude will convince you to be aggressive on small cap stocks to the end of the year, because seasonally, usually this is where small cap stocks do the best. Okay, so any other stocks I had to cover? No, I covered all of that. Perfect. Okay, guys, time to play the last video. Hopefully you'll get more convinced, but I'm not trying to convince you to get into things that are not worth doing. But I think yeah, if I see enough stuff when Jerome Powell speaks on Wednesday, that's 2:30 Eastern. 2:30. He starts speaking 2:30 Eastern. The actual report and press release will be 2 o'clock Eastern. And then 2:30 is when he starts talking. Okay.
Fed meeting coming up, and you can see. So if you follow the Dow theory, that's a pretty good bullish sign for the economy and for the market. But yet you can see over the last month, we've actually had an about face in transportation stocks. So if there's one thing that maybe bothers me a little bit, it's seeing the transportation stocks underperform by as much as they have over the last month. And again, when you look at the last month, you can see the NASDAQ 100 and S&P 500 leading the way. Mid-caps also green, but mostly flat. Dow and Russell down, but down less than 1%, so not really that big of a deal. but we are still, you can see over the last month, seeing leadership from the NASDAQ, which kind of goes against what I expect and what I'm going to expect in 2025, which I believe we'll see some outperformance by small caps. But I'll be talking about that more in an event tomorrow, and then again at the beginning of 2025 when we host our Market Vision 2025 event. But more on that later. Let's move on to the sectors. Again, going back 1 week. This last week, 2 of the aggressive groups were up: consumer discretionary, communication services. That's really what helped lead the NASDAQ 100 to some outsized gains. Consumer discretionary, led by 2 of its biggest components, Amazon and Tesla. Both of those set new all-time highs this past week. And Tesla finished on its all-time high on Friday at the close. So a lot of strength from those 2 stocks, which make up more than 40% of the consumer discretionary ETF, the XLY. Communication services getting a big lift from a lot of internet stocks. Google moved to an all-time high, just absolutely exploded this week. We've seen Meta printing new all-time highs. Netflix pulled back later in the week, but Netflix has been very strong over the course of really 2023, but last several months in particular. And then you go to the bottom of the list and you can see a lot of more value-oriented stocks. So you can see real estate, industrials, healthcare, utilities, materials. So these are more dividend payers, defensive, more defensive oriented. They didn't keep up with the market. So normally when you see a down week, and we were down in most areas, normally when you see a down week, you see the opposite. You see the aggressive groups down the bottom, and you see the more defensive areas at the top, because usually you have more gains to give back in those more aggressive areas, but that was not the case last week, and worth noting. S&P 500. So I wanted to point out a couple of things. You can see we're just kind of, moving back a little bit, consolidating the gains that we saw that led to our first close, our first movement up above that 6,100 level, which was just a little over a week ago. But I want you to focus on the left-hand side of this chart, because I've actually pulled up some information on historical December performance, and this might shed some light on the weakness that we've seen this past week. But the first thing I wanted to point out, this is the S&P 500. These are annualized returns that go back to 1950. So from December 1st to the 15th, we have an annualized return on the S&P 500 of 11.22%. The 16th to the 31st, it jumps to 34.68%. So no doubt in my mind that historically the stock market likes the second half of December more than the first half. Now, the first half is held back. Look at this December 9th to 15th period, where we have an annualized return of minus 16.92. So the first half of December gets off to a good start from the 1st to the 8th, but then the 9th to the 15th really brings it back down to earth. And then finally, I wanted to mention the strongest part of December, which is the 21st to the 31st. Those are the dates that I refer to as the Santa Claus rally. You might hear others talking about the week between Christmas and New Year's. I believe, based on all my data and research, that it really begins at the close on December 20th. So the 21st through the 31st, yielding or gaining on an annualized basis 40.5%. Pretty strong. Now I'm going to go and show you the same information on the NASDAQ and the Russell 2000. So first on the NASDAQ, pull up these numbers again. 1st to the 15th, minus 6.21. And if you jump down here to the 9th to the 15th, minus 45.97%. That's historical performance on the NASDAQ 100. Now remember, this week we actually did pretty well because of those Mag 7 stocks, but that is not normally the case. Then we go to the 16th to the 31st, and that jumps up to 44.49%. And if you look at the S&P for the second half of the month, it's 34.68%. So another 10 percentage points higher. I will mention, though, that the NASDAQ, these annualized returns go back to 1971. So not all the way back to 1950. The NASDAQ index began in 1971. December 21st to 31st, though, look at that strength that we normally see on the NASDAQ 100 or on the NASDAQ, on the NASDAQ 100, up 61.8%. That's the annualized return. Now I'm going to show you the IWM small caps. 1st to the 15th is basically flat. This goes back to 1988. The 16th to the 31st, up 62.74%. Small caps, which had a really rough week last week. But again, if you look at the 9th to the 15th, that was typical. What we saw here all week long selling, that's typical with what we normally see with small caps from the 9th to the 15th. Check out the 21st to the 31st, though, 64.57%, which is just about on par with the entire second half of the month, 62.74%. But these numbers are greater than even the NASDAQ and the S&P 500. So very, very strong time period coming up for small caps that I wanted to make sure I pointed out. But look at those returns. I mean, normally, the average annual return on the S&P 500 is about 9%. And so when we start looking at these numbers, like the Russell 2000 for the second half of December, we're talking about almost 7 times what we normally would expect on the S&P 500. That's a lot of outperformance. Now, again, this is historical. Doesn't mean it's going to happen this week or the rest of this month. Just like I said, this past week, the NASDAQ was strong, even though historically that's down. So it's not a guarantee. I just like to use this information as another potential signal, something else to be aware of as we move into the second half of December, which historically has been much more bullish. Transports. So here's the big decline that we've seen really since about the 25th of November at the close. We were at 17,750 and now we're just below 16,750. We've given back 1,000 points, which was essentially the entire move on the breakout. So this is not a good look for transports. We did come down to the 50-day. We are in gap support area. So I'm not saying that we're not going to bounce back. I'm not saying that the rally's over in transports. I actually think transports will do very well. But what I do want to point out is look at the higher high here on the transports. Look at the lower PPO reading. So we had higher prices, but lower PPO. That's a negative divergence. What I always talk about when I see a negative divergence is there's usually when the PPO is going up with price action, there's no negative divergence. I look for that 20-day to hold as support, and then we bounce. That was beautiful here. We moved up in price. You can see the PPO was moving up. So when we moved back, we held that 20-day moving average, and then we took off back to the upside. But on this breakout, we reversed back down, failed to hold the breakout level, and did so with a much lower PPO. And that tells me that the 50-day SMA or 50-period SMA, in this case 50-day because it's a daily chart, could come into play along with a PPO centerline test. That's exactly what we've gotten. So we could be poised here for a big reversal back to the upside at this point, because as far as I'm concerned, the negative divergence has played out. At this point, with a 50-day test and the PPO at the centerline, there's no momentum. By default, the PPO is calculated using the 12-period EMA and the 26-period EMA. Well, this is a daily chart, so the 12-day EMA and the 26-day EMA. Well, they're exactly the same. When you get a 0 test on the PPO, that means both moving averages are exactly the same. So anyway, I find that to be really interesting. I could see this reversing back to the upside. It could continue moving lower, but that's not what history tells us. And that's honestly not what I'm seeing in my other signals. I don't believe this market has topped, not from a long-term perspective. So I believe we're going to go back up and set some new highs, possibly in December, but more likely, or depends on which areas we're looking at. So like transports have 1,000 points to make up. I don't know if that's going to happen in December, but I would suspect it's going to happen early in 2025, if not December. All right, I wanted to show you, I've been watching growth stocks versus value. And so what I've done here on this chart is this is a weekly RRG chart. and I've used the benchmark as the S&P 500. So anything that you use to compare and to watch the rotation is going up against the S&P 500. So when it's strong, it's going to be over here on the leading side of the chart. When it's weak, it's going to be down here in the lagging. Well, this is the large cap growth index. This is the large cap value index. And look at where they are. I mean, we could extend this tail length and we can kind of see where they've been traveling. But you can see on this chart, value has been over on the left side of the chart. Growth has been over on the right side of the chart. And I think if we pull up a daily, use the same thing. Look at the large cap growth. It's absolutely exploding up and toward that upper right-hand corner. That's very bullish. That means that both momentum and relative strength are accelerating in growth. And look at the other side, value coming back down. So I know, you look at the 10-year treasury yield going up this week, and some are pointing to the possibility of, resurgence in inflation. I just don't see it, because if you're going to have an inflation problem, the last thing you would be buying is growth stocks. Growth stocks get hammered during inflationary periods. Just go back to 2022. That's when inflation was taking off, and growth stocks were absolutely crushed. Does this look like that Wall Street is setting up for a big inflation problem? I don't think so. So anyway, let's go back to that weekly. I'm going to bring up a couple of other. So I'm going to bring up the mid-cap index as the benchmark, and I'm going to show the DJUS growth mid-cap, and then also the DJUS value mid-cap. And so let's take a look at the mid-cap level. We just looked at growth, or large cap. Now let's look at mid-cap growth versus value. So we'll save these changes and look at what's going on here. Look at mid-cap growth here on this weekly chart exploding, and look at value going in the opposite direction. So we're seeing the same thing at the mid-cap level. And if I change this one more time, let's pull up the small cap, and we'll get rid of these two. And let's pull up the Dow Jones US growth, small cap growth, and Dow Jones US small cap value. And let's look at these. Once again, they were both kind of going up into the leading quadrant for a while. Now growth, small cap growth is continuing while small cap value is rolling back down. So again, we've got growth stocks at every level, large cap, mid cap, and small cap, outperforming value stocks. That doesn't happen in a, possible, explosion higher in inflation. So I'm not buying into it. I think the move in the bond market was simply technical based. We were down the 50-day moving average in the yield, which means that the 10-year or the TLT had been coming up and testing resistance from underneath. So it fell back, and as that went down, treasury prices go down, yield comes back up. So I think it's more of a technical play than it is an inflation play. And therefore, I don't think it's going to stick. But we'll see. Anyhow, the reason I wanted to bring up this RRG chart, because tomorrow morning we have, I'm going to be joined by my good friend, Joyous de Kempenaar. Send you a copy of the record. We have a seat for it. Just go through these charts pretty quickly. So anyway, I want to make it as easy as possible for everyone. All right, moving on. I want to talk a little bit here about the Mag 7. So let's just go through these charts pretty quickly. Apple, you can see there was the double top. We've broken out. December has been a great month so far for Apple. It's trillions of dollars of market cap just keep growing. It's a great company, and obviously, Wall Street can't get enough of it. Microsoft. Now, Microsoft has come to life, although I don't like the candlestick that we see from Thursday. That's a shooting star candle off an uptrend, so I'm not surprised. that we did pull back a little bit here. Also, keep in mind this upcoming week is options expiration week. And the stocks that I'm going over, the Mag 7 stocks, are heavily traded in the options world. So there's a lot, I mean, a ton of in-the-money call premium that could get wiped out, or some of it could get wiped out if we see a reversal in these stocks. But if money comes out of these stocks, where do you think that money might go? Could be going right back into the small caps, which had been leading up until the month of December. Anyway, keep that in mind. But Microsoft, not able to get to an all-time high yet, but it was pretty impressive here in December until the candle that we saw on Thursday, that shooting star candle. NVIDIA. NVIDIA is the other one that's been struggling. All the way back in June, I talked about these semiconductors that I thought they had topped and that we had to really watch closely until we got a breakout on the Dow Jones US Semiconductor Index, which had printed a high at 21,000. So just to give you an idea of what that looks like right now, you can see we're at 20,000. Here was the high in June. Here's 21,000. We almost got to 21,000 in July, and then we went right up to 21,000 the beginning of November and backed off again. I mean, this is a nice uptrend. We're sideways consolidating, which is great, but we haven't broken out yet. So I think you got to be a little careful with the semiconductors. They're not making those moves in that group. There are some stocks that are making moves. Marvell's done well. Broadcom had a big pop on Friday after their earnings report came out after the bell on Thursday. So there are some that are doing well, but for the most part, we've got many of these stocks that are underperforming, like NVIDIA. It's still a leader in the semi space, but it is definitely lagging some of the other Mag 7 stocks. So there again is the NVIDIA chart, trying to hold on to support just above 130. We'll see if that holds next week. Amazon, big breakout. So here we broke out above 200, went back down just below 200, stayed above the 50-day moving average, and then soaring right back up to new highs here in December. So Amazon looking good. Then we've got Google. So Google making this big breakout above its July high, pulling back Thursday and Friday, which makes a little sense off of this big move to the upside. But clearly, Google has changed the look of its chart with that breakout this past week. Meta, also look at the move in December, breaking out above that double top from back in October. Meta looks good, showing a little bit of weakness here and again with options expiring next week. I'm not going to be surprised if we see a pullback in these names that have had such a big run, these Mag 7. And then finally, I saved the best for last. I mean, Tesla is flying. 240 at the beginning of November, and now it's at almost 440 in a month, a little over a month. That's just a massive move to the upside in Tesla. And if we pull up a long-term monthly chart on Tesla, this move has now gone back and taken out that late 2021 high. So that is the all-time high now that we're seeing on Tesla. So, and these are all high-octane growth stocks. I mean, mega in terms of market cap. Most of these I just talked about are, in the trillions in terms of market cap now. So, as I look at this, I think that we're in a position going into 2025 where we'll see a lot of upside or potential upside, but I do believe that there's going to be leadership in key areas that are going to significantly outperform other areas of the market. So again, we'll start to talk a little bit about this rotation and what impact it could have. Julius and I think it's going to be a really lively educational event on Saturday morning. So I hope you can attend. If you're watching this video after the event, still go in and register because we'll send you a copy of the recording. So you can still go in and register. Showed you the ways.
All right, guys. You got the message, right? Small caps and Santa Claus rally. That's what we're going to look forward to. So unless Powell and the Bank of Japan screw it up Wednesday and Thursday. So one thing I'm going to put up last are my two favorite long. These stocks I've been long in for a while, and I've been recommending them for how long on this channel now. Axon, these body cameras that people like to watch. I love their logo here. It was when like they had acquired the drone company. So Axon, AXON, is going to be added to the NASDAQ 100. Palantir, another one, is going to get added to the NASDAQ 100. You know Palantir. Palantir is the one I've been recommended too. So we're going to have to see how it does this week into Monday. Monday is when they officially get added into the NASDAQ 100 index. And of course, you have MSTR, MicroStrategies, which follows Bitcoin. It's going to get added. And today you saw it tested that area resistance of 430. And now we're back into this rectangle. And the whole moving average here, the daily moving average 18, is about to roll over. This is do or die, you know, a lot of these things. So I don't know. I'm pretty bullish, though. I'm going to be pretty bullish on MSTR. Now, Palantir, Axon, this might be the last weeks we're going to see any highs, you know. They might try $80 again, Palantir, into the New Year's. Maybe that's the end of it. Axon, same thing. Maybe they'll try for 700 into the New Year's. I mean, this candle right now today seems to suggest like, yeah, there's people buying it still. It dropped. It dropped quite significantly and bounced back up. Palantir also had a drop, right? Bounced back up. So the ETFs will have to be forced to buy these stocks into the rebalancing of the NASDAQ 100. And SMCI is out the door. SMCI is out the door. It didn't make the cut. So that's what's going to replace it. But that's opportunity. Opportunity for new people to buy for the next move up to 60. So let's see. Let's see. There's a lot of opportunity right there for trading. A lot of opportunity around index rebalancing. Okay. Oh, and one last thing. GameStop. There were a lot of call options being bought, and now it went and closed right back at that resistance of 29.44. Very nice. Very nice. If it breaks out here because of Jerome Powell and the small caps, yeah, I wouldn't be surprised. So there's a lot of opportunities coming through, man. Coming through. I'll have to go through some more. We'll have to see if I find new ones. I do have some new ones, but these are really penny stock. Like you have Vuzi. This is a meme stock that was played way back when. Oh yeah, I think this was yeah. Look at that. COVID, it was like 80 cents, jumped up to 30 bucks. Oh yeah, it crashed back down to 80 something cents. Now it's 350. Yeah, there's a lot of these suckers that might do. Kodak. Meme stock too. Yeah, it was a meme stock. Can you believe that? Kodak, Eastman Kodak. Yeah, maybe it's ready to run again too. So watch that. Kodak, KODK. Vuzi, VUZI. So like I said, these type of things, these type of stocks, they make no sense. But as long as there's liquidity, you can trade it. So anybody that's gambling, that wants to gamble, yeah, the opportunity is ripe in the coming weeks. I think so. So keep those in mind. If you want, we're gonna have to go over some other like stocks like A Lab, Astera Lab, some later this week. WGS, GeneDX. So this is a potential breakout stock right here. I like what it's doing. WGS. This is like the 23andMe, but actually does something, you know, instead of 23andMe. So they do genetic testing. Yeah, it looks pretty nice. This chart looks pretty nice. A Lab, IPO, yeah. It's kind of new, very risky, but it's been doing quite well since September. I love the look of this. So I want to see how it does. We got AOI. Yeah, it's still fighting just below that resistance 37. So there's a lot of potential stocks out there. Definitely that we have to look at more carefully. But yeah, Asan is one of those software ones that like, oh man, this is beautiful. This is beautiful. This is the way it's doing right now. ASAN. So man, so much opportunity. If you can grab it at the right points and sell it at the right points, that's the game. That's the trick. So I hope we're gonna learn. So yeah, we gotta do the homework thing actually. So for you guys that didn't watch the October streams into November streams, let's look at some homework. Let's see, Wyckoff free materials. Yeah, go to this website. Look at the free materials there. Look at the reading materials. Okay, so we can go, and then I'll be working on the DeMarc stuff, and then later on into next year, yeah, I'm gonna try to break it up into like trading, like my trades for the week, if I want to be aggressive for aggressive people. And then we're going to have a portfolio of more swing trades and long-term trades with ETFs. So that's why I thought I would get to in November, but no, I couldn't get to it. I just do this now, where I just try to give you some overview of charts, and then we're going to do some lectures at the same time. So redo some of the October streams, the material, and then remake them into actual lectures in next year. See what we're gonna do. So I'll try to get some help with that. Let's see if Gary and Portia, these guys can help me clip out things and do stuff, and we can get things going like that. That'll be great. That'll be really great. Yeah, that'll help a lot of people out. So Lindy Lou, if you're listening, yeah, you were gonna ask me some question. I don't know, you weren't here today, so like maybe you'll show up later this week. But if you need something, go ask a Portia on the email here, and say that you want to talk to me about some question. Yeah, like and we'll try to do ones where we have Q&A or something. I mean, I don't know. This is very ambitious. We have to. It'll take some time. More organization on my part. Not very organized as a person in general. So, and I haven't been working in a long time. I never needed to work for like 5 years already. So, like, yeah, now I'm doing these streams. This is kind of like work, man. So it's gonna take time. Here we go. Okay, so this is the Wyckoff stuff. All right. Okay, let me hide this. So you can read all this stuff, but like more importantly, first thing you should read is Anatomy of a Trade, Wyckoff schematics here, and then the Composite Man's Bull Market Campaign. So read those three, and once you get that, you have an idea. It's gonna really help you out. I mean, and then later, you can read the blogs here, like the Bruce Frazier's blog, and then watch those videos where he talks about like the point figure, so Garion can watch those. So yeah, anybody that's interested in that, that's really important. Those are really important because once you notice these things, it's really easy because I can just show you right now. That's why I knew Bitcoin was gonna go up. It's just like, dude, that's Wyckoff right there. It's just Wyckoff stuff. And put the chart up. It's just like, this is classic Wyckoff. So once it did this move here back in the Thursday, February, and Friday, so December 5th to December 6th, once you got this crash down here, right, this pump crash, and then now you go sideways, you see, it's just like so perfect how it does it. It's just like, okay, you do springs, and then you do this, and you move up, and then you create this cause. They call it a cause, but it's basically a range. And then once you make these higher lows and higher highs, you keep going back up. So that's exactly what you want to see, And if you look at the diagram here on the Hong Kong here, I'll put the diagram up on this one. I'll put the Bitcoin on this one here. I'll put the 4 hour on this one. Yeah, 4 hour. Like if you look at that, you see on China, it just matches, it just aligns everything. And I just drew it here. This is like a classic example. You see that? Look what it's doing for China. This is perfect. This was perfect. And once it breaks out, so this is the Hang Seng. It's like 22,500. Once I see that over the summer, so I'm gonna expect like a lot of tit for tat between China and Trump. Bang, 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 bang. And eventually China will finally get out of its deflationary mode and actually go up, because they have no choice. They got to reflate their real estate bubble. And they got to put people in the stock market. This is going to be a real easy trade to make. Once they're, and the commodities market too, because China's going to rely a lot on commodities. And then once China's economy starts moving, that's it. You got coal, you got natural gas, you have oil, crude oil, gasoline. For us, over the summer will be really expensive, and then that's it. That's when you really know things will be going well. So we'll go over that sometime later. But here, I just wanted to show that. It's just like, yeah, let me see. Let's shrink this thing. Okay. See that. Yeah, you see that? See that? And you know, if I just line it up, it's just like, yeah, it's just Wyckoff, man. It's just like you got the spring, you got the test, you can move up, you can do this phase D, and then you break out. Now we're in phase E. So yeah, I really recommend you guys just to read that stuff. Read those documents in the website, read the blog, you know, go to that website, learn the Wyckoff stuff. You can recognize these patterns right away. And man, we're hitting it right now. We're hitting it. And then later on, I'll try to introduce the DeMark stuff. So that's going to take a while because I have to learn it myself. It's really complicated. I think someone with autism might do a lot better learning that stuff. But I think it was worthwhile to play around with. So we'll see how it goes into next year. And hopefully that'll improve the timing of things. And then I have my blog, also Substack or whatever. I'm trying to figure out, see what I'm going to write on there too. And then every week we're going to have some new stuff to say and trades to make, because I'm not going to be trading all the time, but I know you guys are. So you guys will be interested in seeing what I feel like, if there's interesting trades to make, because you guys got to build your capital. And it's also good for training, right? You guys learn that, and then from there you can move on to options and futures and other things. So you can learn everything you can from looking at stocks. And like I showed you, those penny stocks, they move up fast. And there's really no need to be more aggressive than that. Because you had the quantum computing thing and all that, yeah, no problem. And you're playing around Bitcoin miners, yeah, no problem. So there's plenty of things to play with. And some of you guys are less aggressive. You also know about the ETFs. You see what I'm talking about, ETFs. I talk about home builder ETFs, small caps, things like that. You can rotate. So we're going to get that going, where we show like, how you make money on sector rotation. And if you want to get a little bit more aggressive, then you can use either like the leverage longs or leverage short ETFs. That's also something you can use. And yeah, that's what I expect. So you guys can take whatever you can from me and then move on from there. I think there's a lot of value here that I can bring. And from there, you can move on to your own path, you know, because I think the most important things I want to get through you is like, look at the charts, look at the cycles, and then from there, look at the fractal nature of multiple time frames, and then move on, keep increasing your knowledge base, and then build your depth. Hopefully, yeah, we can increase it in a way that's intuitive. So that's my goal. That's my goal for next year. So good luck, guys. This year will be interesting. because we will get towards the end of this year, and then we will see 2025. And I think 2025 will be a big deal. And then after that, prepare yourselves for 2026. So always be thinking ahead. Try to get what you can in the coming year, and then prepare yourself for the storms that will come later. There will be storms. All right. I'll see you guys tomorrow or Wednesday, depending on if anything interesting happens tomorrow. I think after Monday's move, maybe we'll have a reaction tomorrow, I'm sure. And then from there, we're ready to buy again before Jerome Powell talks, 2:30 Eastern.
Feel like I should go. Feel like I should go. Feel like I should go.